Hi, welcome to On the Vine podcast. I'm Chris Hempstead with Mirae Asset Securities, USA. Thanks for joining us today. Real quick, as usual, we like to let you know what we're thinking about and what's been on our mind. Shouldn't come as much surprise. I think we are still very much listening to the tea leaves of what may or may not be a product release in ETF form with digital assets, specifically Bitcoin. The newest and latest updates that we have for you is that now it looks as though if there were a foot race, that possibly Ethereum might be edging in front of Bitcoin for the odds makers, if you will, saying what will get approved first. We just don't know at this time, but all eyes are on all product types, but Bitcoin and Ethereum seem to be leading the pack right now, with Ethereum making some advances. Outside of that, it's we're heading into the end of the year here, 2023. Obviously, a very exciting election cycle coming up. Everybody's on pins and needles, very sensitive to what is said and done. Policy will be a part of all of the discussions related to the 2024 election cycle. So we are gearing up for a volatile 2024 as it relates to the way the election sort of unfolds. Stay tuned for more on that. We'll try to get more specific about the products and the ideas around that. But in the meantime, I'm excited to bring you a guest today from affiliate company of ours, Global X. Jon Maier will be joining me to talk about artificial intelligence, cloud computing, robotics, and more. So stay tuned. We'll be right back. And Jon, thanks so much for coming. Jon Maier from Global X, our esteemed guest today to talk about the Global X brand. One thing I promised I'd do is try to keep things lighthearted. You know, I know you have a lot to talk about today with respect to Global X, but we were kidding around and talking about the lunar launch, you know, the lunar race, and how the Russian spacecraft recently crashed onto the surface of the moon, and it seems like India is right behind, and we're probably not too far behind that. And I don't know, one of our colleagues said, well, I wonder if there's a Russian space tech ETF or an inverse space tech ETF. Is that just too edgy for Global X?
Do you think?
But tell us a little bit, Jon. You got to Global X roughly 6 years ago, coming over from Merrill. What's it been like for you? Because the Global X that you walked into 6 years ago is very different than the Global X that is today. Not necessarily from a firm culture standpoint, but just the size and scope and capabilities of the firm. Tell us about the growth that you've been lucky enough to be a part of and be meaningful part of.
Sure. Thanks, Chris, for having me on. Global X has certainly become a different company than it was when I joined 6 years ago. When I joined, we were roughly $5 billion in assets. Now we're roughly $42 billion in assets just in the U.S. There's also a global business that I'll talk about. But if you think about what's gone on in the past 6 years in the space that we operate in, there's been a tremendous amount of growth. One of the main areas that we are focusing in on is thematic investing. When you think about the areas that we have ETFs in, what comes to mind first is thematics. And when you think about thematics, you think about cloud computing, you think about cybersecurity, electric vehicles, clean energy, and the ecosystem surrounding many of those areas. And there's been a huge growth because of many different factors. First of all, if you think back to the pandemic, we needed a lot of these themes to actually operate. You think about, we all worked from home. Cloud computing became super important. Cybersecurity, the protection of our data. And all of these, some of these companies that we had not heard of previous to the pandemic, like Zoom, became part of our everyday lexicon.
Sure.
So we saw this tremendous amount of growth from 2020 on. And obviously that growth is continuing to this day. But thematic's not just the only area that we're seeing growth in.
Well, real quick, before you go to the other areas, what is it about Global X that made them, I don't know, sort of to be thought leaders and product leaders in that space and sort of be ahead of the curve? Is there something about the genetics of Global X that says, look, we see things that other people don't see? and we're gonna focus on that. We don't necessarily disagree with having a diversified equity large cap portfolio as part of your investment sleeve, but we really have conviction in having a piece of your portfolio in thematics. You can't just put your finger in the air and say, I want to do that. You have to have some sort of core expertise. I mean, how did that happen at Global X?
You need an infrastructure, and the infrastructure really is the people in this situation. And what we've done is we've classified the universe of possible themes and sub-themes out there. And then we've hired people to research those themes. And then what we've decided to do, we've decided to come to market with themes that we have conviction on over the next 5 to 10 years. When you think about the adoption of a theme, it takes a while. And if you think back through history, almost everything was a theme at one point in time. You think about the telephone, you think about the railroads, you think about dishwashers and telephones. They're all themes at one point. But now you have this ETF structure that only can invest in public companies, obviously. So you need at least 20 companies that operate within that theme. So we've hired research people to look at many of these different themes, and that we believe that will have meaningful impacts on traditional sectors over time. Something that's going to change something else. You think about financials, what's going to change financials? Fintech. What's going to change industrials? Robotics and artificial intelligence. So these themes are the future of the traditional sectors in some way.
So that's exciting to hear, because a lot of these newer ideas and these concepts that come to market oftentimes are initially met with resistance and in some cases even anger, like where people say, well, this is going to ruin society and this is going to change things, everything from the telephone to the railroad, all those things. They weren't necessarily overwhelmingly embraced in the early days, but later would become regular parts of our lives. So you're kind of teeing up AI, right? You have a couple of products that really embrace the AI, artificial intelligence universe, which you've mentioned before to me in other conversations, expands way beyond just a computer theme or a technology theme. Tell us about AI and some of the products that you have that hone in on that. And I'd love to hear your sort of explanation as to what sectors encompass those products for you. I mean, because it's not just a computer company, right? Or a tech company. It's much more than that, right?
Yes, and AI, we could talk for days, weeks, months, years, or more. And AI has been around for decades. If you think about it and look back through its history, AI has really been here since the 50s. What's different now, since November, something that we all know about, ChatGPT was brought to the public domain in November. Obviously, Microsoft made an investment in OpenAI, and all we had been hearing about for the past 6-7 months is AI. Now, what's driven markets up over the past 6 months or so really has been just 7 or so stocks. So if you look at the S&P 500 or the Qs, the tremendous performance in 2023 has been driven by 7 names.
The Magnificent Seven.
The Magnificent
We've brought this up in the past.
The big question is, how is that going to be broadened out? Well, first of all, let's take a step back. The Magnificent Seven has driven the performance because they are the holders of data. Data is a commodity that is expensive, and they have this data. They also have the ability to purchase the necessary hardware, the GPUs, to operate generative AI, which is very important. Obviously, there's one company out there that's been doing pretty well this year that pretty much has cornered the market on GPUs necessary for generative AI. That won't last forever. There's going to be other companies who develop that the hardware necessary, but for now, that company's doing pretty well. Now, the bigger question is, what does AI mean for us as a society, as for individual companies, and where is it going to go? And I think the answer is we don't know. What we do know is that it can help improve efficiency. I think to my everyday, how I use ChatGPT, correct grammar to start a research paper. It's not going to complete my research paper. I'm going to put 10 data points in and say, give me a summary. That may save me an hour or two. So what it's doing is it's improving your efficiency. Now you take that to other industries, you take it to the law profession. Judges and lawyers are writing briefs based using ChatGPT, putting inputs in, and out comes a brief. I'm sure they read it for accuracy.
Does this mean their rates are going to come down? Their billable hours will go down as a result, or is that never going to
Do you need a lawyer?
Well, I see the bills.
And then doctors is another area. So if you think about diagnosis of a disease, and a patient comes in and says, I have a pain in my chest, and provides information about other symptoms, a system can generate a diagnosis and the drugs necessary to treat that diagnosis. What it does is frees up the doctor's time and allows the doctor to spend more time with the patient to explain the problems that they're having, the drugs that they need, increases bedside manner. You know,
this is all incredibly exciting. I mean, it really is. I mean, I know very little. I'm a surface reader on a lot of this stuff, admittedly, but when I hear it explained, when I hear about the possibilities with medical advances, quantum computing, you know, biotechnology, all of it is really encompasses into one sort of general outcome of AI, cloud computing, robotics, all of these things, like it or hate it, the future of this, but of everything, and climate change, environmental, like all of it is tied to these kind of technological advances that we're just really in the early stages of seeing what the benefits could be. And your product suite has a little bit of a trifecta there, right?
We have two ETFs that really focus on and I didn't answer your question earlier.
No, it's good. I want to make sure we get your tickers in there.
You know, because it's such an exciting area, and kind of gets me going. So we have two ETFs that have exposure to AI or are more focused on AI. One is AIQ, which is more broader exposure. It does have inclusion of the Magnificent Seven, or most of them, as well as other companies. But what it does is it caps the weight in the portfolio at 3% upon rebalance, where if you look at the Qs, you look at NVIDIA is driving the performance of the Qs.
Right. And
the larger the market cap gets, the higher exposure in the portfolio than in the index that it gets. So our ETF caps the exposure, so it's more diversified. So I think that's a positive. Now we have another ETF, the ticker is BOTZ or BOTZ, robotics and artificial intelligence. Now it has exposure to AI, but robotics really plays on the efficiency cycle, meaning if you look at the S&P 500 earnings calls, you look at what's going on in the CapEx cycle, 9% year over year increase in CapEx in a period of time when earnings have been declining. Very unusual when everyone's been saying that we're going into a recession, or now everyone's saying more of a soft landing. But the CapEx cycle is really strong. The labor market is very tight. Companies are looking to improve their efficiency. Robotic technology is a way to do that. And if you look inside the robotics and artificial intelligence ETF bots, you'll see companies like Intuit Surgical, you'll see Keyence Corp, Dynatrace. You'll see companies that have industrial applications as well as healthcare that can help other companies improve their efficiency. In a time when companies need to improve efficiencies to improve margins and labor costs are higher, and how can we overall improve the profitability of our companies?
Right. I'm going to hit you with a sidebar. I mentioned, obviously AI and robotics and cybersecurity. It's very exciting. The thematics. There's a thematic we haven't touched on, and you don't have to spend a ton of time on it, but I personally have an interest in this just because every once in a while I'll ride the train instead of taking in a flight. Okay, or I'll take a flight for that matter. And I find that when I'm on the train, I notice the violent nature of sometimes of a train ride on the U.S. rail system, and I think to myself, what is wrong with this infrastructure? Or you'll be driving down a road and the construction seems to never stop, or there's a bridge that's too small, or there's just there's so many things in this country's infrastructure that I'm barely touching the surface on that seem to have glaring needs of improvement.
Sure.
You have an infrastructure product, PAVE. It's done incredibly well in terms of gathering assets and things along those lines. Can you touch on how PAVE is built and sort of how it looks to get ahead of some of those, I guess, the spending and allocations of money to certain projects and infrastructure ideas? And one thing I think it ties into is climate change, right? Climate change is going to force the hand of infrastructure commitment, right? At some point or another, we saw in Florida last year bridges and causeways getting wiped out. I mean, that's an infrastructure spend for that county or that state. I mean, this is just going to accelerate, I think. Is that exciting for Global X, having a product like PAVE in the market right now that for a longer term investor might be exciting to ride along with? Maybe not as exciting as AI, but
Well, but equally as important. So if you look at a ETF like PAVE and you look at the components inside of PAVE and you look at the industry sectors, you'll see a large industrial and material component. Now, this makes it more of kind of a traditional hardscape type of theme. It's not technology based, but everything ultimately has to have that infrastructure on the ground at some point. But if you look at what's going on, or what has gone on in Congress, there's a bunch of fiscal packages that support infrastructure in the US. The Inflation Reduction Act, the Jobs Act, the CHIPS Act. This country has underinvested in itself over the past 50 years, quite honestly. Now there's a lot of money allocated on the public side to develop our infrastructure, to rebuild bridges, tunnels.
have you ridden
airports.
the subway in New York City? Did you ever find yourself,
Yes, on a daily basis.
you hear that screeching sound and you say to yourself, this subway system's been here for so long, and
But I think it's better than the
do
70s.
they not have
though.
WD-40? I mean, like, I don't
I
know.
think it's better than the 70s when it was
Yeah.
all graffiti
Yeah,
on the
it's true.
subways when you
So
look at some
true.
of these old movies. But and infrastructure projects, hard infrastructure projects, take a long time. The fiscal packages are the money spread out over 10 years. There's not a ton of shovel-ready products. We're about 1 year into the fiscal packages, so the approvals are coming. But what does also happen when there's public spending, there's also a lot of private spending that goes on. So the tangential spending that's going on because of the fiscal packages is huge and can run into the trillions of dollars over the next 10 years. So that's going to be a positive. And that also impacts other more technologically based themes, whether it be data centers, which are really important for the cloud, and charging stations for electric vehicles and the entire ecosystem around electric vehicles. So a lot of this hard infrastructure really is going to help, that will assist in moving forward some of these other themes that we're talking about.
Does PAVE go global?
It's a US based ETF, so
Gotcha.
it's
I would imagine, and the reason I'm teeing you up for sort of a closing segue, I was going to ask you about what's next for Global X. I think I read that you have some new active products coming, country specific, one of which is India, but you can talk about both of them. And the reason I was thinking that in a second was because you talk about infrastructure and you talk about India. It's such a big country. It's young in terms of its investment, potential, I guess. So Global X has recently launched 2 actively managed country-specific-ish type of ETFs, Brazil and India. So tell us about these 2 products. This is pretty exciting as a new chapter of Global X's future.
Yeah, we now actually have several actively managed ETFs beyond these new offerings. And these new offerings are, for Brazil, the ticker is BRAZ, and for India, it's NDIA.
And you were able to get those tickers. That's very nice. Sometimes I'm amazed that some of these tickers still exist because it makes so much sense. It rolls off the tongue. NDIA,
Yeah,
India.
We have we spend a lot of time researching tickers. I sit on the new product committee, and if I told you how much time was spent discussing, analyzing how is the market going to react to these tickers? Are there anything unusual, weird about these tickers that we don't want to use? So we really vet these tickers out.
We had a lot of fun with the cannabis tickers, believe me.
Yeah.
Everybody going back and forth on the different. But anyway, go ahead. Tell us about India.
So India is an incredible market from our perspective. First of all, you have a huge, huge population. You have a of 1.3 billion people and growing. You have a population that has a 78% literacy rate, which is really, really important. So the bottom is certainly moving up. The middle class is developing, and the upper middle class is growing meaningfully. So that's important. You also have a business environment that's getting friendlier, which is also helpful. The political situation in India is friendly to the West, which is also a positive. Labor costs are cheaper and cheaper than China. So those are all positive aspects of India that we felt that it was necessary to come out with an ETF, an actively managed ETF, so we really can kind of vet each individual company. In a market like that, we think that's important.
Yeah, I'm excited to watch and see how that sort of plays out, because it is such a huge market.
Huge market, huge potential. And also with, if you start with the tariffs, the Chinese tariffs from 2017 into the pandemic, and for companies needing to diversify their supply chains, reshoring, friendly shoring, having more options. And that feeds back into the discussion I mentioned earlier is about the CapEx cycle. CapEx cycle in the US is very strong. You could look at companies like Apple, they're spending a lot of money to diversify their supply chains.
Right. I mean, I think we did see something in the recent years is our dependency on China it's not necessarily a bad thing at all, but I think maybe our concentration of dependency is something that concerns people, and saying, well, there should be some fail-safes in place. I'm not saying one country can be a fail-safe for another, but certainly an area as large and a population as large as India, relative to China, relative to the US, creates a lot of opportunity to move businesses around. So that's exciting. And in Brazil, obviously, the largest of the South American, commerces, I suppose, right? What brought you there?
So Brazil is a really interesting country from our perspective in South America. You have a large, diverse population. You have a lot of natural resources. You have a skilled labor force. And most importantly, you're seeing a pivot from the Brazilian central bank in terms of more friendly fiscal packages that will help propel the economy. I think that's really important. You're seeing a decline in interest rates,
which should be a driver.
It should, absolutely. If you look at historically, Brazil has high interest rates. So internally, a lot of the Brazilian investors, local investors, would buy treasuries, their treasuries, because it's yielding 13%. So that created somewhat of an issue in terms of investing in equities. Why would you invest in equities when you know you're getting 13%? But with inflation declining, interest rates declining, that certainly is helpful to the business environment.
Wonderful. Well, Jon, I can't thank you enough for making the time to come in and chat with us. I'm sure we'll be chatting again soon enough. I'm Chris Hempstead with Mirae Asset Securities, and you're with On the Vine podcast. Thanks, Jon, with Global X.
Thank you, Chris.
We'll talk soon.